All right, let's jump right in. We're going to talk about one number today, just one. But this number, it's completely reshaping how we in India need to think about our financial future. It might even shock you a little, but trust me, getting your head around it is the very first step to a solid retirement. So let's get into it. Okay, let me ask you something straight up. How much money do you really need to retire comfortably in India? I mean, have you ever actually sat down and done the math? It's one of those things we all kind of push to the side, right? Well, a new report just dropped a very, very specific number on us. And boom, there it is. 3.5 crore rupees. Yep, that's 35 million rupees. Now, I know what you're thinking. That might sound like a massive amount, or maybe you think it's doable. But either way, that number wasn't just pulled from thin air. It's backed by some serious economic forces that are shaping all of our lives. So why that number? What's driving it so high? Well, it turns out there are a few key villains working behind the scenes, eating away at our savings. Let's unmask them, one by one.
All right, villain number one. This is the big one, rising inflation. You can think of it as a silent wealth killer. Because let's be real, the rupee you save today, it's not going to buy you the same amount of groceries or anything else in 10, 20, or 30 years. It's no wonder the HSBC report found that a whopping 90% of Indian investors are worried about it. It just quietly, slowly makes your hard-earned money worth less.
And then there's villain number two, just the plain old higher cost of living. I mean, you feel it every day, right? Healthcare, a decent place to live, giving your kids a good education, all of it is getting way more expensive. We're not even talking about luxuries here, just the basics for a good life. And all those rising costs, they directly pump up the size of that retirement nest egg you need. And the third villain? Well, it's kind of ironic because it's actually great news. We're living longer. But a longer life means your retirement money has to last longer too. We're talking maybe 20, 30, or even more years after you stop working. So that financial runway has to be much, much longer than it was for our parents' generation. It's not a nice to have anymore, it's a must have. Okay, so we've got inflation, rising costs, and longer lives. And that 3.5 crore number might be starting to feel, well, a bit impossible. But hold on, before we panic, let's zoom out and see how India's retirement number compares to the rest of the world. A little perspective can change everything. And this is where it gets really interesting. Take a look at this. You see that 3.5 crore for India? Yeah, it feels like a mountain. But look at the US. You'd need the equivalent of 13 crore. Or Singapore at 11.5 crore. Suddenly, our number looks, dare I say, modest. It's a powerful reminder that while our costs are definitely going up, it's all relative to the cost of living in different parts of the world. Okay, we've mentioned inflation is a villain, but now we're going to look at its real, destructive superpower. It's the evil twin of the compounding you want in your investments. This is where the whole challenge gets way, way bigger.
Pay close attention to this, because this is where the penny really drops. Let's just assume a pretty standard 5% inflation rate each year. That 3.5 crore you need today, if you're retiring in 2045, that number becomes over 9 crore. And for anyone just starting their career looking to retire in 40 years, brace yourself. You're going to need almost 25 crore rupees just to have the same buying power that 3.5 crore has today. That right there is the brutal, devastating power of inflation over time.
And you know, at the end of the day, these are all just projections on a screen. There's a great quote that says it all. Life doesn't run on an Excel sheet. And it's so true, right? Life throws curveballs. Markets go up and down. That's why you can't just have a fixed number in your head. You need a plan that can bend and adapt to whatever comes your way. All right. I know that last part was probably a bit intense. Looking at those huge numbers can feel daunting, for sure. But here's the good news. We're not helpless. The report shows that smart investors in India are already making moves. They're adapting. So let's pivot and talk about the solution. What's the path to security? So what are people actually doing? Well, the data from the report shows a really clear shift in strategy. Look at this. Investors are holding less cash, only about 15% of their portfolios now. So where's the money going? It's moving into things that can actually beat inflation. We're seeing more going into gold, more into alternative investments, while stocks and mutual funds are still the heavy hitters. The key takeaway here is huge. People are shifting from just saving money to actively investing it.
And this leads to a super important point, especially if you're younger and just getting into investing. It is so tempting to try and time the market, to get in, make a quick buck, and get out. And yeah, maybe some pro traders can do it, but for most new investors, it's a quick way to lose money. The real wealth, the real magic, happens when you play the long game. Disciplined, long-term investing lets that power of compounding work for you, not against you.
So, what's the actual game plan? What can you do? It really boils down to 4 simple, powerful steps. Step 1, and this is everything. Start early, even if it's small. Start in your 30s or even your 20s to get that compounding engine running. Step 2, don't put all your eggs in one basket. Diversify across different assets to manage your risk. Step 3, you don't have to be a genius at this stuff. Get professional advice. Talk to an expert who can build a plan just for you. And finally, Step 4, this isn't a set it and forget it deal. Review and adjust your plan regularly. Your life will change, so your plan needs to change with it. And you know what? After all this talk of challenges and giant numbers, here's my favorite part of the whole report. Despite everything, Indian investors are really confident. And this isn't just wishful thinking. It's a confidence that comes from being more aware of the challenges and being more strategic about tackling them. It's really empowering. Okay, we've gone through the numbers, the villains, and the game plan. So what's the final takeaway? Let's wrap it all up. So here's the deal in a nutshell. That magic number, 3.5 core, it's just the starting point. The real challenge is that sneaky villain, inflation, that can turn that 3.5 core into almost 25 core over your career. So the only way to win this game is to change your mindset. You have to shift from just being a saver, stashing cash, to being an investor, putting your money to work in assets that can actually grow faster than inflation. Look, at the end of the day, a report like this, a number like that, it's just a guide. It's not a finish line. It's a starting block. Its real job is to make us all stop and think, to ask the right questions, and most importantly, to take that first step. So the real question isn't just about the number. It's about what you're going to do starting today. Your retirement story is a blank page.